Hi, everybody. This is Jeff Barton. We are live here on YouTube. Appreciate you listening, tuning into the show. Let's get right to it. The interest rates today have gone up a little bit. 5.84 for the 30-year fixed rate, 5.14 for the 15, 5.25 for FHA, 4.95 for the jumbo loan, and 5.92 for the 5/1 ARM. Those ARM products are linked up to the 2-year Treasury. The 2-year Treasury is at 3.386 yield. The 10-year is at 3.10. There's a flattening a little bit, coming back down to earth, and we'll see what that means. And that flattening is, of course, referring to the 2 and the 10-year coming closer together. There's about a 27 basis point difference between the two. And as I said yesterday on the radio show, that is simply coming back down from what was about a half a point about a week ago. Several things going on in the U.S. real estate market in comparison to China. Let me give you the U.S. report right now. The listings are up. The new and existing homes have increased on the marketplace. Contracts are down, i.e. those properties in escrow, both for new and existing properties. Closings are also down. They're down quite a bit, 19.9% for both new and existing homes. By the way, new home builders have really stopped building in the U.S. A lot of that has to do with futurizing what is the demand going to be and the affordability. If we see interest rates continue to climb, that affordability rate is going to be down. And commodity prices for building those particular houses have really not settled back in. Certainly lumber has, but if we see oil volatility continue, we're going to see also home building prices also continue to go up and down. Sales price. Now, the sales price itself has continued to rise, which again makes affordability less. 10%. Both new and existing homes increasing year over year from last year. However, 2 months ago it was 20%. So we've actually seen a decrease month to month of the value of the homes from 20% year over year to 10% year over year. Now, anybody in any market is going to take 10% increase in value of their home. They would love that. But if we see this trend continuing, in a couple of months, we're going to be underwater. Is that going to happen? Well, we have a lot of different people saying that the housing market is already in a recession. And I've alluded to that already. One of the things that makes that so is this guy, Mark Zandi over at Moody's. He said prices going south in the not too distant future, although some of the other funds and some of the other companies that are out there purchasing real estate also looking to see whether prices are going to drop, have started to put together a large fund, whether it's Blackstone or whether the new home real estate company that Jeff Bezos has invested heavily in, called Arrived Homes. They're putting together large funds. I think theirs is $50 billion to buy homes when the market actually dips a little bit, because we are going to see prices, according to those who, if you read either, you go to Housing Wire, you go to Mortgage News Daily, you go to MSN, you go to Yahoo, you go to any of these real estate sites that are out there, anywhere from 5 to 20%. Some are predicting, especially in a lot of the markets that went up quickly, certainly Albuquerque, Charlotte, Jacksonville, Las Vegas, Nevada, Riverside, San Bernardino in Southern California. There are many other markets, but those are the ones that went up quickly. I.e., in the last 2 years, they've gone up about 30 to 40%, and they may dip down anywhere from 5 to 20%. In China, what's going on in China in order to balance this out? And that's why I say in the header, I'd rather be inflation. I'm not inflation, but I'd rather be recession in the U.S. rather than what's going on in China. What's going on in China is the Chinese government has now stepped in and starting to demolish a lot of the unfinished products, so that those people who already own in areas that are still being developed don't see a devaluation from unfinished projects. There are a lot of companies, probably the top 25 to 30 builders in China, have really ceased because their bonds and the money they use to borrow in order to build and finish and really grow that economy double to triple, not triple digits, but double to 20% per year. Now they're predicting the GDP in China probably 3.5% to 5% this year, maybe even lower. And one of the reasons, the main reason, is because 25% of that particular country's GDP is wrapped up in real estate. You've got all these companies defaulting on their bonds because they can't find buyers. They can't find enough money to be able to finish their projects. You've seen the People's Bank of China lowering interest rates in order to stimulate completion of projects. But in those cases that's not happening, the Chinese government is coming in and demolishing buildings. And that happened in the U.S. in 2009 in Florida. A lot of condos down there that were built on spec or were plowed under. That maybe some other areas as well, but that's certainly happening in China. We'll see if it holds the value for those people who are buying. And by the way, in 300 cities, a lot of those people who were paying mortgages for properties unfinished have stopped doing that, thus adding to the financial stress on those companies trying to finish out those products. Student debt, yep, looks like we're going to get $10,000 to $20,000. We'll see what happens in terms of stimulus. Does that stimulate these people to go out and buy homes? We just don't know. Two other companies, as I alluded to earlier, Blackstone and Arrive, they're buying up large tracts, or going to be buying up large tracts once again, like it was in 2009, and renting them out. I don't think it's good for the economy. I don't think it's good for the marketplace. I think there should be legislation against companies like this. You will find a very hard and deaf ears in certain avenues in the federal government to pass legislation like that. But if you're newly out of college, you're married, you're making $100,000, $150,000 a year, in some markets you can't afford a home. Now that's not right. So that means you have to not buy a home. I know in some markets that particular number would be able to buy a home, but not in the big cities, not in Los Angeles, not in New York, not in Miami, not in Houston, not in Chicago, certainly. Okay, so let's see some other things going on that I haven't really hit upon. Nope, that's it. Anyway, I'm Jeff Barton. Thanks very much for listening, and we'll see you next time.